Greetings traders, this is Houston Shrung from thetradingedge.org, and here is your weekly market outlook for July the 6th, the 10th, 2020. So first and foremost, hope everyone had a good Canada Day for those folks in Canada, and for our US neighbors to the south, hope you're enjoying your July the 4th long weekend. So let's get into the video now, and let's begin this way. So we did have a shortened holiday week this week because of course, Independence Day here in the US and Canada Day north of the border. And we did have the first week of the month, the first trading day of the month, and the first trading day of the quarter occurred this past week as well. So now we have our proverbial lines drawn in the sand for July and for Q3. What we want to be doing this coming week is to really be paying attention to on which side of price, which side of that opening level that price trades on. So really this week is going to be about confirming that this past week's opening levels, because if we trade above those opening levels this coming week, then we have full time frame alignment to the upside. So then you have really no choice to be but to be biased to the upside until things change. Counterpoint to that is, of course, we open high and then break lower, and then you may have that condition of being full time frame alignment to the downside. And that's what we're going to be watching for those two conditions, for either of those conditions, and how price transacts around those levels. So for the coming week, let's talk about the econ calendar, then we'll jump into the actual charts. Econ calendar wise, kind of quiet. Things kind of slowed down this at the end of the week there. So we do have some macro news coming out. We have the ISM number on Monday, nothing too ground shaking there, but something worth paying attention to because it happens at 10 a.m. Then on Tuesday, you got the JOLTS. Wednesday, you have the oil number. Again, nothing too major. Thursday's usually been the big day for the past several weeks. Everyone's watching that jobless claims number to see how the markets react to that number. And so far, the jobless claims have been rising. This past week was 1.4, I believe. Consensus was around 1.3, so it's higher than expected. But the employment situation offset that because it was better than expected. So the markets are really rallied on Thursday, and Friday, of course, was closed this past week. And on Friday, this coming week on the 10th, we have PPI. So watch out for that at 8:30 in the morning. Earnings wise, quite slow because things tend to be slow right after the holidays. So this coming week, only less than a handful of half dozen stocks trading are reporting earnings each day. So nothing too much to report there. But you do want to get prepared now for the coming week. So the week of the 13th, that's when earnings start to kick off again. We got the financials, as always, kicking things off on the 14th of July, so it's still a good 10 days away from when this recording is being done. But again, the 14th is something you want to start paying attention to because that's when people start to really get into the earnings season. So we'll talk more about that next week, but for now, just know that people, you might have a lower volatility week this week as things again begin to prepare for the earnings season. So let's jump into the charts now and talk about the week that was and what to expect for Q3. So this past, just yesterday, I had a group call with some of the guys that I coach, just doing a Q2 review and sort of a prep for Q3. And I think it's useful for whatever level you're at in your trading, wherever you are in your trading, whether you're a intraday trader, swing trader, or longer term trader, is just take a bit of time and reflect on the quarter that was and what you want to do in terms of the coming quarter. The quarterly, the 3-month cycle is a really nice cycle because it gives everyone a bit of time to have some perspective in terms of what happened, maybe how you could have improved, and what you can do better into the coming quarter. So take some time this weekend or early in this coming week to think about how your Q2 went. Right, it's still early in Q3, things are just getting started. But make sure that the lessons that happen in Q2 don't go unnoticed, don't go unlearned, because man, Q2 was a historical one by all accounts and measures, as well as Q1, to be frank. And there was lots of opportunities to, of course, make money and lose money and just get chopped up. So we really had all three trading scenarios in the past quarter. So take some time. Think about how you could have done better. and acknowledge that. Acknowledge what you did well, and just spend some time, giving yourself some acknowledgement there, and being satisfied with the results that you had if they were good. But most importantly, learn from those mistakes and learn from those good trades, because trading can be a tough game, but the way you right the ship is quite easy. You do more of what works, and you do less of what doesn't work, and that's why we reflect and try to give our trading, our process of trading, some perspectives. Perspectives and some time to reflect and be a bit more self-conscious about things. So for Q3, and I was telling this to the guys that I was coaching, what I always try to do is I always try to not just every quarter, but I try to do this every single month. But I also want to be creating goals for myself. And if you haven't seen my videos on goals, and you can take a look at the YouTube channel. But there's really 3 types of goals you want to make sure that you're creating for yourself. And the first type are usually quite easy. The first types are outcome goals, right? Meaning I want to make an X number of dollars this coming week, this coming month, this coming quarter. And those goals that just come naturally to people because of the society we live in. It's very easy to create outcome goals, right? And unfortunately for outcome goals, lots of the time outcome goals are not 100% in your control. Most of the time, they're not in your control, especially with the markets, because you really have no control over what price is going to do most of the time. You may have a small influence if you trade a big enough book. You may be able to move price a little bit, but over the course of a whole quarter, there's no way you're going to be able to control price, no matter what size your book is. So, for why that's important is because you don't always want to be attaching your fulfillment and your happiness and your and how you think of yourself based on outcome goals, because you can't control outcomes. What you can control is your process, right? So process goals. So make sure that you're creating good process goals for yourself so that you can judge the merits of your results on how well you're executing your process versus maybe your P&L, which sometimes is completely out of your control. Whether or not whether you win or lose in whatever, let's say, whether you win or lose on the next trade, that's completely out of your control. So whether or not you followed your process is completely in your control. So those are 2 markedly different things. There's a big distinction there. So make sure you're also creating good process goals for yourself, such as, rank yourself, or you make sure that you're having a good process to maybe evaluate which stocks you're going to be trading the next day. That will be part of your nightly routine. Maybe your end of week routine in terms of notating your charts, notating in your journal, and making those types of notes. That would be a process type of goal to make sure that you're doing that every day. All right. And the final goal, and before we get to the charts, is just making sure you also have qualitative goals. So as much as trading is a numbers business, at the same time we're actually all human beings. And the reality is that fulfillment in trading comes from feeling good about your trading. And so this means also setting aside some time to think about the qualities you want to have in your trading. So do you want to make a bunch of money and feel really crappy at the end of each trading session? Or do you value your time and value your life satisfaction? Meaning, how can you be purposeful in constructing a trading day that's going to allow you to feel good about what you're doing? Because guess what? If you feel good, you do good, right? So that's the old saying, feel good, look good, perform well, right? Perform good. And over time, if you feel terrible while you're trading most of the time, guess what? Your results are going to bear that. So for me, it's very important to have qualitative goals to make sure that I'm doing the right things, to make sure that I'm feeling good, so that this thing that we do, trading, is sustainable, and that there's longevity there, and because I do it because I enjoy it, not because I have to, or because I feel like there's some sort of pressure that I need to do it. All right, so that's what I'll have to say about Q3 in the goal setting process. I hope you take some of those words to heart, and if you can think of any goals that are meaningful to you, feel free to drop them in the comment section. Love to hear from you. Let's get to the charts now. So we'll go through our usual assets, and then we'll go through some of our stocks to look for this coming week, and we'll get to the stars and dogs. So first off, some high level stuff here on the VIX chart. Let me just frame this properly here. So it's getting very close and it's getting tight, right? So here in the VIX chart, inside and down, outside, inside. So we're really watching to see if this price can break below this outside bar that we had in June. Because if it goes outside bar down, that's Momo down, correct? So we're watching for that possible scenario there. If it breaks below, low there is 28.83. It's Momo down, and we're gonna come back through. We're gonna continue our downward movement. But on a higher time frame, this is what all the charts look like basically on the indices. This is a little tight on VIX. I apologize, but unfortunately the VIX is not a nice chart because of course it decays, so it's kind of hard to one thing that's going to help here is if I turn off the moving averages for a quick second. Is that going to help? Actually, doesn't really help. There we go. I'll turn off the Bollinger Bands. So here on the quarterly chart, it's outside inside. All right. If we break below this 28.83 level, not only will it trigger the Momo down situation on the monthly chart, but it will also go outside, inside, and down. And then we're going to go after that pivot low here, the January lows. That would be the target if it breaks below last quarter's lows. So that's what we're looking for in the VIX, and the opposite for the rest of the indices, because the rest of the indices, except for the Qs, look just like this, but the mirror opposite. Okay, so now back to the higher time frames. So we go back here, we'll turn on our Bollingers again, and let's talk about the weekly chart. So the weekly, it's basically a continuation now, right? So it's a continuation move. It went inside bar down, right? So inside bar down and down again. So there was a chance at the beginning of the week here, we said this last week, that the bulls, had they stepped up on the VIX, they could have created an inside bar reversal had they taken out that level, right? We talked about last week. If they could take out that level, then it's a possibility you can come back and take out that pivot. They did not do it, right? So this week they faded it down 14%. So pretty much a victory for the buyers at that point. So now it's just a continuation move now to the downside. Inside, down, down. 2 weeks of downside action. This first week, I've been saying this in the past few videos. The first breakout bar is oftentimes a fake breakout, right? So they lure people in. Not say luring, it's probably not the right word, but the folks who are chasing momentum, so they'll sell this out inside bar break to the downside, and price will come back up again, right? And they'll stop out the first rung of traders who try to short this action. So they get stopped out on the pullback up because they're chasing on the downside momentum. They get stopped out, and the move actually happens to the next bar. It's been happening a lot. We've been seeing that the first week's breakout is a bit of a head fake, but it signals the beginning of the move. Because what happens here is that you saw the inside bar break down to the downside here, but it did not continue. The next week it did not break above the prior week's high, thereby we didn't get that inside bar reversal to the upside. And all you need to see here now is for price to break back below the prior inside bar's low again, and there's your second setup back to the downside. Okay, so there now, we're watching it to go continuation. Was it keep going down, or did we get a pop up? So watch for that. And on the daily chart here, let's go to the daily chart. It's here on Monday, right there, right here. It went inside, and up. Okay, inside, and up. So it looked like they had triggered these two inside bars to the upside, but they sold it right away. And you can see right there that weekly open. See that purple line? It kind of held, right? So it came up here, it opened there, came up, came back in again, and Tuesday, inside bar reversal to the downside. That's a short signal, right? And they immediately went after these pivots. They went even further, and that's your 200-day moving average right there. So there's your 200-day moving average, that black line. And on Thursday, they came really close. If not, they touched it. It's very, very close. Okay, so now we want to see how this thing continues, because right now the sellers of the VIX are very much in control there. Just something to watch out for here on the 2-day chart. Actually, yeah, it's just continuation. So we'll just watch for the continuation now of this inside bar down on the VIX chart. And as I mentioned earlier, there's your quarterly open and your monthly open. So we really want to be seeing how price begins to react around those areas. If price breaks up back above here again, then that's a full time frame alignment to the upside on the VIX, because you're going to be trading above the monthly, quarterly, and here the weekly opens are going to be down here wherever we open up on Monday, right around here somewhere. If we pop up on that, we're going to be trading full time frame alignment to the upside. If it pops up, if it fails and comes back down again, once again, you got full time for alignment with the downside. And so that will basically, that's actually your ideal scenario if you want to short the VIX, is you want to see a pop up first and then short it versus just chasing this thing down, because then that move will is not sustainable. Ideally, stop some weak shorts out first. So, you get this move that goes like that, pops back up, stops out folks who chased, and then you get that second leg lower. That would be the ideal move for the VIX. So let's talk about SPY now. Mirror opposite, and here on the SPY, here's your quarterly chart, right? So there's your outside inside. Give it a second. There's your outside inside on the SPY. It takes a little bit further to trigger this thing because you have to go all the way there, 323.41, before that breaks to the upside on the quarterly chart. Okay, so there's that on the quarter. On the month, it's continuation. So pretty nice move so far. Inside bar, up, inside bar. We're going after that pivot high. You know why? That's the all-time highs. Q's already did it, right? Took out that outside bar high, and now SPYs, as well as the rest of the indices, that's the pivot that everyone's watching, that they're watching for, is to get back those all-time highs. That, I think, for the time being, is, even though it seems like we're kind of rising on a wall of worry, that is actually the least line of resistance. So that's the least amount of friction, is to go higher versus going lower. I think because just how we're trending right now, that's actually the harder move, is to go lower. Although you may have occasional selling points of selling and pullbacks to stop out people who are chasing, I think, again, the move higher is the move of least resistance. So in terms of the week, we opened up low. We did trigger the inside weekend down. They bought it back right away. As I said, you can watch last week's video. You just want to be watching how you break these prior levels, right? I'm saying on the weekly, it was very, very clear what that area was, what those levels were. The prior weeks, high or low. If you break below or above either one of those ranges, you want to see if they can stay above it or below it. On the weekly side, it could not do it. As soon as it broke below, they popped it right back up. So on the daily, it looked like this. So on the daily, here's your daily move. I'm going to fix this line here for everybody. There. Here on the daily, we open right there. That's the quarterly open. Okay. It pops back below there briefly, touches the 50 period moving average. That's the purple line there. Breaks below the prior week's low, very, very short, by a few cents, and they buy it right back. And then we have basically 1, 2, 3, 4 consecutive days of upside. Okay, so there's your SPY chart now. And basically on Thursday, let's just do this. On the weekly chart, you do want to just watch these levels. We'll redraw them. Excuse me. So there's your range, right? So inside, outside now. So how's this range going to break? Is it outside bar up? That's your Momo up. Is it outside bar down? That's Momo down. That would be interesting to see that, because that's full time from alignment with the downside if that happens. But for now, the up condition is, I think that's the more likely one, because you have that outside bar right there. Okay, that's your outside bar, and that's the pivot that people are going after. Look, that's also a red line. That means that's the quarterly level. That's with the level that I marked earlier. That's your prior month's high. Prior quarter's high. So you break above that, that triggers the quarterly chart to the upside there, and then you have, then you're going after those all-time highs again. So all-time highs are, very, very possible for the SPYs. But so we did have a bit of weakness on Thursday, so I don't want to pass over that. So we did have this weakness here. What's interesting is I always like to watch this in the trading week, is which days I think it's very important to pay attention to and to track the gaps, right? So on Monday we have a small gap up, but the gap itself is inside the prior bar's range. Okay, on Tuesday we actually gapped down slightly based upon where we closed the day prior, and then the buyers bought it back. On Wednesday we basically gapped up a little bit, but not outside the prior bar's range. And on Thursday, we finally have a gap that was well above the prior bar's range, and then the sellers faded it. Okay, so that's interesting to see there, because when you have this situation where basically you have 3 or 4 days of buying, and this last day going to a long weekend, what were people going to do? Were they going to carry their longs into the long weekend, or they're going to cover some of their longs, flatten out a bit so that they don't have to worry about that over the holiday weekend. That's kind of what we got on Thursday. We had a bit of profit taking, although we did end a bit. I think a little bit weak on SPY. We had some really good rallies in some other names like tech specifically, but at that point here, this is not uncommon to see some people take some profits into a long weekend. But this is technically gap reversal, so it's very possible now we get a couple of days or maybe 1 or 2 days of selling that comes back in here. We stop out some of these longs who got a little bit aggressive to the upside, because this thing here took out all these pivots, right? So the high there is 315.64, high there 315.70. You see how clean that is? So 70 is higher than 64 there. That means anyone who got short in this sequence and they put their stop above that bar there, they all got stopped out. And that's the way the markets move, right? So they're stopping out everyone because they know there's liquidity there. So everyone who got short in this sequence here, now they're stopped out, and then we've reset it again, right? So it comes back in, stops out anyone who got long, and then stops them out, and maybe we get another move back to the upside again. We'll have to wait and see how that plays out. But we'll not be surprised now to see the market come back a bit. But if it keeps going gangbusters to the upside, it breaks back above this purple line, we know what that is. That's Momo up. That's Momo up, because we expect to move to the downside. If it doesn't happen and it breaks above that purple line, that's Momo up. That means the buyers have stepped up aggressively and kept buying the markets. And then again, that just gives you some more context about the tempo of the market. Okay, so that's what we're watching for on these SPYs now, to see how that level, that range breaks in terms of that outside weekly bar. But on the 4-hour chart, yeah, you can see it here, just how strong that was on the Monday. So Monday, outside bar right away. They basically crushed it in when we went short. Ran them over. Then we had 1, 2, 3 full days, 3.5 days of just climbing action, and then on the afternoon session they took some profits. So that's how she wrote it. That's all she wrote for the week. So let's talk about Qs now. We'll go a little faster because we know what's going on with the SPYs. So Q, slightly different pattern, but the Dow and the Russell look just like the SPY for the most part, just slightly different levels. Here on the Qs. This year, there's no outside inside on the Qs. You know why? Because it went outside up. So it's Momo up on the Qs, and look, for the quarter, for the Q3, it's already broken above Q2's highs. So this is Momo up on the Qs, and it's pure momentum. So until you get a low taken out down here, it's the bias to the upside, because the buyers are in full control here. Okay, for the Qs. On the monthly front, it's just, look at that, up. That's a bar up. Bar up, bar up, bar up. When I say bar up, I mean this bar here is, the high is higher than that bar. That high is higher than this bar. That high is higher than that bar. And that's higher than that bar. So it's just bar up, bar up, bar up, bar up. Okay, that's four consecutive months in a row now where you're getting higher highs. Not only that, but we're spending very little time actually inside of the prior month's ranges. So we're getting range expansion here as we're basically coming through that. We're going back through the range again and back out the other side. So Qs, what can you say? Lots of strength to the upside there, and we got another possible Momo up condition. So here we draw our ranges. This past week, it did go outside bar. Sorry, it went one side down at the beginning of the week, right? So this would look like a shooting star. Everyone was worried about the shooting star on the Qs. Shooting star, what's going to happen? What's going to happen? Well, they did break it lower, but they bought it back right away. See that? So they broke it lower, they bought it back right away, and went through the other side. That's an outside bar. That was a possibility there once it comes back into the range again, and the buyers are strong enough because of tech to take it right back to the other side. And buyers now, if you break up back above this purple line, that's your Momo up condition possibility there on the weekly chart. Okay, so there's your Qs. On the daily chart, what can you say? 3 consecutive days of higher highs, back to all-time highs again. We did get that gap reversal here though on the Qs on Thursday. Okay, did it quite get in here? Low high is 251.52. Low, no, actually did not do gap reversal even. So this is so strong that the price stayed above the prior bar's high. So right now the Qs, even though that's not a nice looking bar, it's kind of a small red bar deep inside the inside the Bollinger Bands. It's not that bearish. So again, really to turn things around, if you haven't been watching these videos, you'll know that you need to have a reversal on a higher time frame to really turn the markets around, create a bigger reversal. That would mean taking out this past week's lows. So price, wherever it opens up this coming week, has to come back through all this and take out that low to create a Momo down situation that to scare some people. Then again, you still got the levels right there that they have to contend with. Monthly level, monthly open, and quarterly open. Okay, so let's go on to Dow now. So let's go Dow. In Dow, same thing as the SPY. So I'm gonna go faster here now because we know this the playbook. So I'm just gonna draw in one level here because we do want to see how this thing breaks this outside inside on the quarterly. But that's the level we're watching, 276.38, to see if we can break above that to trigger that outside inside and up. This is just going inside bar up right now, so that's continuation. And for the Dow chart, for the most part, it did look a lot like the SPYs because we did get that gap reversal on Thursday. So so you can see the Dow was nowhere near as strong as the SPYs because this high here did not take out that swing high here. All right, so they did gap reverse that and possibly come back in here now a bit. But you have a lot of support here. You got the 50-day right there. Yeah, you have all these prior levels here, so we'll see how that handles it. But for now, we are watching to see, because look how tight this stuff was going to the long weekend. It was not range expansion for the Dow. In fact, it was the opposite. It was consolidation. Outside bar down, inside inside. That's 2 inside weeks consolidation. So this week here, we really want to be watching how you break this consolidation pattern, because right, the Qs went outside bar up, right? The SPY went outside bar up, but the Dow and the Russell went inside inside. So these guys are consolidating. So how do they break this range? And if they break the range, that's the pivot to go after right there. The prior quarter's high. That will trigger the outside inside up on the quarter. That's what we're watching for. If you break that level, very high chance we get back to there again, triggering that outside inside and up on the quarter. So there's your Dow. Let's talk Russell. Go a little faster on the Russell. I'm not going to show the quarterly chart because that looks just the same. It's basically outside inside and up. Let's go back to the weekly chart. Excuse me, this is on the, I thought it was an inside week on the Russell, but I guess I misspoke. We did break above that prior bar's high, so we technically did trigger that. So that is actually a signal that got triggered. So now, yeah, it's working its way back up to take out that pivot high there, assuming you do not take out this week's low. So if you're a buyer, if you're long Russell, if you want to see the Russell go up, you do not want to see the sellers take out this past week's low, because then that would be an inside bar reversal to the downside on the weekly chart. Because on the quarterly, sorry, I'm going to pull it up. I said I wasn't going to. I just do want to mark this level here so it becomes apparent what I'm talking about. That level there, that level there, right? So those are your ranges for the quarter. Very wide range because that was a very wide quarter. But this is what it looks like on the weekly chart. Okay, so here you break above that pivot. Now you're going after that pivot, and then you're going after that pivot, and that will trigger that quarterly level, the inside bar break to the upside, if it gets up here and breaks back above that. Let's talk about the Canadian side, so TSX. Okay, so TSX so far on the quarter, outside inside, and here's our ranges again, right there. Okay, so we know that's what we're looking for there. Okay, let me just tag that one down here now if I can get it. You know what, I'm not going to bother for now. There we go, got it. Perfect. So on the monthly chart, here we go. So inside bar up, and inside bar for now, very close to taking out that level there, 15,980 approximately. And the weekly chart, we have the TSX here, is that attempt now to take out that prior outside bar high. So it's starting to do just like we saw in the Russell, outside bar down, inside bar up, right? And there's that pivot high right there. That red line, that's the quarterly high, which coincides with this outside bar. So that's a very high chance we take that guy out, because we know what outside bars are basically broad informations. So you're seeing a broad information play out right now, and that if it works, it's going to take out that pivot high right there. Okay, and it triggers the outside inside and up on the quarter. So there's your TSX moving slowly but doing its thing. And how about emerging markets now? This is one I've been watching very closely because, funny enough, although it hasn't had the same type of returns like the Qs, the charts themselves are very, very strong. So here, emerging markets, a large part of that is Asia, and China, and so forth, and here and Korea. So 3M, 3-month chart, outside, inside, and it already triggered it. Okay, so this chart has actually already been triggered on the inside, on the quarterly chart. So outside, inside, and up now, we triggered that. So it's making its way back to that pivot high. That's what it's trying to do. Okay, so that chart already triggered. On the monthly chart, you can see how strong that is. Look at the monthly charts. Yes, these are not as big in terms of returns, but we're looking at the strength here. Inside bar up, up, up. 3 months now of higher highs. We're going after that pivot high right there. Okay. And for emerging markets on the weekly chart, let's just pop that guy up here. There. So how it broke that quarterly level was through an outside bar. So now it went, was up, and then it went down, up, creating the outside bar. And this coming week, if we break above this past week's high, that's Momo up for emerging markets. Very, very bullish. So, potentially people rushing into that trade if we see that Momo up condition. Okay, some folks got stopped out down here, and they had to buy it back again if they wanted to get involved in the trade as it broke back above the prior bar's high. So emerging markets now looking quite strong. Let's see how this thing breaks now on the outside bar for the coming week. Okay, and once again, I'm not drawing just the bullish picture. I'm the opposite. This is just it's implicit in what I'm saying here is that we're looking for it to break on both sides, either side. If it breaks above there, the reason I'm sort of biasing that's because the price is simply closer to that level, right? It's hard for price to go all the way down here and take out that level, that low there. So as we get into Monday and Tuesday, why I'm saying this level, why I'm pointing out this level more than that level, is because on Monday and Tuesday it's more likely we take out that level than that level. It's more possible we take out this level maybe on Wednesday, Thursday, Friday, but it's very hard for Monday to go all the way back through that again. Not saying it's impossible, but it's less likely. So during the week, again, this is just the implicit assumption. I don't say it, but this is what I'm thinking as I talk about these things, is that as week progresses, you want to see is if price cannot break above there, or if it does and comes back in and starts to come back like that, then this possibly takes out the other side of the low there, and you need to prepare for that. Even though I'm not saying that while I record these videos, that's the understanding of the price action. Just like it happened this week, right? So when it opened this week, it broke below this prior week's low. That's a shooting star, it's kind of a red flag, but it popped back in again. So then you have to be aware of the possibility it can come out the other side and create the outside bar. Okay, so even though I'm not explicitly saying that, I cannot forecast that. It's always the understanding that that's the possibility as things unfold with price. Okay, so let's go to gold. So gold, a bit of a head fake this past week and a bit choppy, to be honest. So we had a nice clean break 1 or 2 weeks ago. We had a 2-week sort of a 2-week move, but this week it kind of took pause. So on the bigger time frame, quarterly chart, it's just going up, right? So we haven't had, a red quarter since here. That's way back in July of 2018. That's 2 years ago, right? So think about that. There hasn't been a red quarter in gold for 2 full years. So that's not bad. So right now you're in a Momo up condition on gold. Momo up, inside, up again, up. And this past quarter, it's kind of tight right now, but it did break above the prior quarter's high. So it's Momo continuation so far on the gold front. And here, you actually had a Momo up here on the monthly chart. So it's Momo and up. So no, the month just started. So we're just watching for this guy, but that's the condition right now. It's Momo up on the monthly. On the weekly chart, it looks like so. So we had that break out of this range. I mentioned that 1, 2, 3 weeks ago. It broke out of that, and now it's popped up, right? So we had 3 weeks now of higher highs. This past week was, pretty much an inside week, even though we broke above that prior week's high. It's such a tight bar that you can call that an inside week, even though it's not completely inside the prior week's range. That's basically, you're trading like it's consolidating. It's basically a doji. Inside, up, up. Nothing wrong with that so far. It just not doing anything. It's not really expanding in terms of range yet. That may come in still. So simply now you want to watch. Does it take out that week's low or not, or do we continue this up move? Okay, like the higher high move. So there's your MGC on that, and let me see that one. Here, people are getting chopped up. All right, so you got double outside bars down, and then you have an inside bar to close things off on Thursday. Okay, so very tight trading on Thursday. That basically went nowhere. So now, how does it break the range? Because this is outside bar down. If you break above here, then you got to contend with that level there. That's your monthly, quarterly open. See how you kind of sandwiched here? This is what we talk about many times in the videos. When you have mixed time frames, look, it's trading below the monthly, quarterly, but above the weekly. And so now you have this type of situation here now where some folks are seeing green charts, some folks are seeing red charts, and so there's no consensus there, and oftentimes you get this really tight stuff as people, you know, battle it out and decide who's going to be more aggressive. We break above there, go after that pivot, though you do have to take out this level here. So that's something you want to watch for. Okay, there's your gold chart, and let's talk BTC now. BTC USD not doing a lot. You know, I've been saying in the videos I've been very light in terms of my trading with cryptos, and it's because we're very much range bound, very range bound, and it's not going anywhere. So I'm not spending a lot of time focusing on that. I prefer to focus on things that have range expansion. So big time frame, quarterly chart, outside inside. Okay, so there's your outside inside chart here on the quarterly. I'm just gonna clone this line very quickly, clone that guy, and we'll drop it down here. Okay, outside inside, how do you break that range? Okay, how do you break that range? You can break it back above there. That's 10,398. Then you can get that level and then press go back up here again. The issue with the Bitcoin, as I've said, if you really want to go macro, look at the 12-month chart. You got 2 years and a half now, basically, of inside trading. Although, you know, the ranges are pretty wide in cryptos, Bitcoin specifically. You know, so this year here we've had a range between 10,491, let's say 10.5, and 4,000. So that's a 6,500 approximately point range. So there's definitely room to make money there. But understand that when you're trading inside bars, there's a potential for things to get choppy or not to have the range expansion, which is what you're getting now with Bitcoin. As even though the bars, look, it is, and we've had 1, 2, 3 up bars in a row, so 3 higher highs, but it's super tight, right? Because you're spending most of the time in the months inside of the prior bars ranges, right? Look at that. Month of June was mostly spent inside of May's range. May was mostly spent inside of April. April mostly spent inside of March. You get it? So this is how you can tell when you have, you know, some chop, chop's not the word. When you have consolidation, is when you have these bars that are overlapping and you're getting that constriction or contraction of price. Range expansion is the easiest stuff to trade. Is when you get price break out and they don't spend a lot of time inside the prior bars ranges. Look at that. Outside, inside, outside, inside, and up. Look at that month of April 2019. Very little time spent inside the prior bars range. Likewise, and then starts to get tight again. Inside bar, breaks to the downside. Again, it's tight, etc. Okay. So Bitcoin for now, you know, 3 bars up in a row. Inside month so far, just beginning. Here's what I'm looking for. If I'm actually waiting for this thing to break. Assuming we settle like this on Sunday night. Outside, inside on the week. That's interesting to me. I'll take that signal for breaks. I'll take the break of the signal in either direction, outside inside, because it's a clear actionable signal for me. Outside inside on that, and on the 2-day chart, it's looking like this. Potential outside inside also setting up on the 2-day chart. Okay, so I'm just gonna sort of redraw that. Again, just note that the price may not be the same here by the time Sunday rolls around. But right now you have that weekly chart looking like this. Those are the ranges, I mean. So the high end is 9298, low end 8950. So on the 2-day chart, you got a potential outside inside on that front. Look how tight that action is, right? That's so tight. That's why you have an inside week, right? That's why it's called an inside week. So if this remains inside week, inside the bar on the 2-day chart, I will take a break of this bar either way, because it's going to take out that high or that low if it remains in this pattern, and then it's very likely that we're going to trigger the following levels, the high or the low of the week. Okay, so that's what I'm watching for BTC. So that's all of our assets. Let's do a quick review of some of the things to watch for this coming week. Here's what I'm looking at in terms of charts. Here's some interesting ones to watch. Semis. So we got a number of semi names that are interesting. Take a look at STM here. Semis, you know, after Micron's report or earnings report, you know, and they went flying. Here, STM. Look on the weekly chart. Outside bar down, inside. Possible inside bar reversal now on STM, and I like that because on the monthly chart, STM is also going inside bar up here on the monthly chart with that outside bar. Right there, those all-time highs. That would be a very nice area to go back and reclaim. AMAT, same kind of condition. So AMAT, another semiconductor name, semiconductor play. Not as sexy as NVIDIA, but still a good name to watch. Inside, outside, inside. and it broke to the downside on the weekly chart. But here again, I'm going to delete some of these lines here because they're not appropriate. They're old. Here, we break above that level, inside bar reversal to the upside on AMAT, possibly there. Okay, so there's your possible inside bar reversal on AMAT. Now let's talk about some industrial plays. Vale, VALE. The VALE chart, well, on this charting platform doesn't show it, so maybe I won't spend too much time looking into it. But yeah, on my other charting platform, I do see an outside inside showing up here on the Vale, so it doesn't show it up here. So let's move on. Let's talk about instead about Nucor. So that one here is showing interesting. That's another industrial name. Inside. Look at the consolidation there on Nucor. How's it break that range right there, Nucor? Because the monthly chart looks like that. Okay, so it already broke the inside month and up. So we did get a red month in June, but that may just be again a continuation, setting up for continuation here if we can get back above this pivot high again. Okay, so there's your Nucor on the monthly chart. Marijuana names, there's a number of them setting up. CGC, one of them here on the monthly chart, on the weekly chart, excuse me. Double inside. CGC, how's that guy? Oh, sorry, that's double inside on the monthly chart, but this is what I want to show on the weekly here. Outside bar down. All right, so outside bar down. If this thing breaks, we're going back to that pivot high, and that will trigger the monthly inside bar. So watching CGC for something interesting. Ameren, this is, you can see these combinations down, they're getting very, very nice here. Ameren, slowly going inside bar, outside, inside, and up, down here. Again, sorry, this chart's slightly different than what looks like on my other charting platform. But on the monthly chart, I think this one makes it interesting here. Yeah, possible inside month reversal. You break above this pivot high there, right there on Ameren. I'll just change that to an orange because I mark my monthly levels in orange. Break above that, you're going after those pivots there. So Ameren possibly a possibility of going higher. And let's do one more stock to watch this coming week. Let's go. If we go back to the weekly chart, let's go with let's go here. Let's do Dollar General. Okay, so double inside on the Dollar General, possibly going back to all-time highs. I'm gonna throw one more in. Okay, Weight Watchers. Been watching this one for a while, and this one here also interesting. Double inside on Weight Watchers, and why that's interesting is because you combine that with the monthly chart. Look at that, inside, and up on the monthly. That means this thing already triggered last month, but came back in again. If this thing breaks back up above again and reconfirms the prior months, that the May highs level, then that's continuation of this inside bar up move. Remember I said the first bar, sometimes you don't get the actual move, it's the second bars and the coming bars that where it really gets going. So watch for that possibility. Just like what happened back here, right? So this back, when we had inside bar up here, it was an outside inside bar up here, it basically closed flat, right, on the month. For the one, not flat, but it basically did not break above and stay above the breakout point. So most people may have got disinterested, they got disinterested or stopped paying attention to Weight Watchers, but it was the following months where things really took off, because that month there it was up 38%. That month 26%, right? So you don't want to lose track of some of these stocks just because they don't get that follow through in the same month, the same bar, okay? Because this is prices fractal and applies across all time frames. So whether I'm talking the monthly chart, quarterly, weekly, etc. Now let's talk about stars and dogs, then we'll wrap things up. Stars. So let's go first. The stars, man. Citrix finally started taking off. This thing has been a bit of a laggard, but this past week it was gangbusters to the upside once it did that outside bar up moment condition. So CTXS going back up, and looking like on the weekly chart, we're going back to all-time highs there on CTXS. Very clean chart there. So sorry, that's a monthly chart. That's outside, inside, and up. That's why it's clean. The weekly chart looks a little bit choppier, looks like that, but the monthly chart makes it smooth. You can just see it breaks above June's highs. Now you're going after all-time highs. Okay. Let's talk now. Let's go back to the daily chart here. Yeah, Etsy, another one of those tech companies. This is why the Qs hit all-time highs. Etsy's very smooth trend to the upside. We got Amgen. Good news out of Amgen. So biotech doing well. Amgen going to multi-year highs, if not all-time highs. Amgen, look at that move. Look at the 2-day move on Amgen. We have Overstock, don't know the news coming out of this company, but it had been a real dog for a long time. Looked like it was going out of business. But man, Overstock kicked it into overdrive this past week. And yeah, going into fresh recent highs. And NIO, Chinese car company, electric car company, also coming out of the woodworks. This thing had looked like it was going to perish down here back in October. It was trading below. I think it's trading around $2, right? Even below $2. Now back above $9. So wow, what's going on with NIO? Dogs, here's some dogs for you. So not all marijuana stocks are doing well or setting up well. ACB, man, this thing has been trending lower. Rubber cannabis, not doing well, not looking good. ICPT drug company, they did not get approval for their, I think it's I can't remember what kind of drug they had, but it did not. So I think it was some sort of liver treatment drug. Did not get approved for further testing. Walmart, surprisingly, people don't like Walmart anymore. Sorry, not AMT, WMT. Trend in Walmart is basically flat. So whatever's going on in Walmart right now, maybe people are waiting for the next earnings or something, but right now there's no trend here. So this is where the trends go to die. This is what you do not want to be trading if you look for range expansion. It doesn't look like that. It has to break out of that range. ET, Energy Transfer, so oil companies, some of them are not doing so hot. ET, one of them, trending lower over the past 2 weeks. And final dog, not a lot of dogs, but there are some dogs. Valero, not doing well. I don't know if it's related to the oil pipeline news or not. For me, it's not that important. But from what I can see here, it's the trend is mostly to the downside. It's been one of the poor trending stocks as it pertains to the stars and the dogs. All right, so that's the end of this week's video. I hope you enjoyed it. We spent a bit of time today not just talking about the charts, but also talking about the process and thinking about some relevant Q3 goals. Again, remember, think of not just outcome goals, but think about goals that are actually in your control. That is, your process-based goals and your qualitative goals. And as always, if you enjoy these videos, hit the big like button so that other folks can find these videos. Click on subscribe if you want to be notified as soon as the videos drop. Or you can actually head over to the blog, thetradingedge.org, where you can find a lot of my writings. You can sign up for the newsletter that comes out every week. In that newsletter, I share this video as well as some weekly trading perspectives. As always, thanks for making the time to watch the video, and look forward to talking to you again next week. Stay strong, happy trading, and we'll speak again soon.